Ladies and gentlemen, welcome back to the channel. Here in this video, we will go over everything that happened today in our markets, broadly speaking, as well as AMC Stock. Now, we are going to talk about AMC's earnings, which will be coming out later this month. And if this could be a turning point, if you will, for AMC Stock, for better or for worse. And my expectations, what the numbers are supposed to be, EPS, total revenue, all of that. And AMC Stock has quite a history of doing well recently on earnings, but then falling afterwards. Most notably, last earnings, I'll never forget it. AMC reported earnings beat expectations. Everything was good. The stock was up. And then on the earnings call, Adam Aron said, well, if this writer-actor strike takes a long time, then that's going to hurt our business. The stock fell a little bit following that statement. And then what happened? The next, 2 hours later, the writers-actors strike completely ended. And then we woke up the next day to what? Adam Aron diluting shareholders. And then you went on a streak of, you were down 14%, down 8%, down 2%, up 2%, down 2%, down 6.5%, up half of 1%, down 3.5%, down 7%. And it kind of just continued, and now we're here. 3 months later, AMC stock has fallen about 64%, 65% or so since last quarter's earnings were released. Last quarter earnings were released. AMC stock was $11.50 per share. I know that even sounds crazy to think about that, because AMC stock now $3.98 per share. We're in totally different stratospheres now to where we were prior. So with that being said, what do I think is going to happen this next upcoming earnings? Well, I think we need to go over the actual earnings expectations together. And here you are. So this article says AMC stock fans should mark their calendars for February 28th. Analysts expect AMC to revert back to unprofitability for the fourth quarter. If AMC does come out with a shocking profit, it would be shocking and unexpected. Probably not going to happen, but if it does happen, I would expect AMC stock would trade favorably based on that. Now, nowadays, AMC stock is trading more fundamentally, right? You don't have the hopium, hypium, whatever you want to call it, around meme stocks. You don't have this huge base of retail investors that continue to hold up AMC stock regardless of what Adam Aron does or whatever results the company puts up. No, the stock is trading alongside the fundamentals. So especially since last quarter when AMC was $11.50 and has dropped to, $3 and some change today, the stock's trading on a fundamental basis. So if we do get good fundamental numbers, the stock, I would imagine, would react favorably to that, but in line with kind of what another stock does, 10, 20% up on some really good numbers. That makes sense. 10 to 20% down on some bad numbers, that also makes sense. Snapchat just today dropped, if you haven't seen this, well, I'll show you. Dropped 35.5% today on earnings. Now, it's pretty standard for Snapchat to drop big on earnings. Here was a 43% drop. Here was a 39% drop. Here was a 28% drop. Here was a 17% drop, a 14% drop, and now, well, I just said 35.5% Snapchat has fell. So Snapchat cannot get a break, but Snapchat, again, trades on fundamentals. And if AMC stock has really good numbers, I expect the stock's going to react really good. If it has really bad numbers, the stock's going to react, I would imagine, very, very poorly. So again, that is something to consider nonetheless. Now, what are the numbers expected to be? Well, it says, let's see. During the third quarter, AMC reported revenue of $1.406 billion and was profitable with a GAAP EPS of 8 cents. However, for the fourth quarter, revenue is expected to fall by 26.47% quarter over quarter, while rising 4.33% year over year to $1.034 billion. Furthermore, analysts expect AMC to revert back to unprofitability with a GAAP EPS loss of 65 4 cents. That doesn't bode well for the company unless it can beat those estimates. Wow. Yeah, that would be a big loss. If these estimates hold true, AMC's 2023 full-year revenue is expected to be $4.74 billion, up by 21.24%, while its GAAP EPS is expected to be a loss of $2.18 compared to a loss of $8.21 a year ago. AMC's expected 2023 revenue growth is strong, but still pales in comparison to the $5 billion plus of revenue it reported each year in 2017, 2018, 2019, and then 2018 marked AMC's last profitable year. Just as important as earnings is guidance. For the first quarter of 2024, analysts expect AMC's revenue to fall by 5.89% year over year to $898 million, with a GAAP EPS loss of 83 cents. Revenue is expected to increase to $1.256 billion during the second quarter before falling lower during the third and the fourth quarters. For the full year of 2024, analysts expect revenue of $4.552 billion, down by 4.01% year over year, and a GAAP EPS loss of $1.81. So I think the expectations are really, really low. I think people are expecting AMC is going to do very poorly in 2024. I actually think AMC could give you a better guide than this. Now, you never know. Movies can get delayed. They can get pushed out. They can get pulled forward. So you never truly know when it comes, down to the actual movie slate and what's going to be announced, especially movies, 9 months from now. A studio could say, yeah, we don't want to release that movie then. We'll delay it a month. We'll pull it forward a month. So it is kind of hard to say, and then it's kind of hard to forecast what movies are going to do well, what movies are not going to do well, so on and so forth. But, in just an overall general specific, I think AMC stock's probably going to give you some better guidance. Now, the problem is if AMC does expect a bad year this year, they're not in a great place to be able to weather that. If they start to lose $50, $100 million a quarter again for a couple quarters, they're going to pretty shortly start to run low on cash. Now, the problem is, and I think that's why Adam Aron is so frustrated about AMC stock right now. When the stock was $11 per share, this capital raise that they raised capital last quarter, I mean, you got a decent bang for your buck. By the time AMC actually raised the capital, they raised capital about $8.30 per share. And they sold, let's just refresh everyone's mind. I believe it was $8.15 or so, times about 40 million shares. They raised about $326 million of cash. Now, there was probably some fees associated with that. Call it about $300 million in cash. So that was good. But now if AMC wanted to do that, if they came out and they said, yeah, guys, we're going to raise some capital here. They're probably going to raise capital like $3.30 per share, maybe even lower than that. The stock's at $4.01 per share right now. So you always want to take a decent haircut off of, the price. And with AMC specifically, AMC tends to drop like 20% on capital raises. So just taking that into consideration, maybe AMC stock would only raise capital at $3 per share. I think I'm being pretty generous here with $3.30 per share. In that case, AMC would only raise $132 million, potentially only enough to fund 1 or 2 really bad quarters for AMC in 2024. And then you'd push the stock to $3.30. Likely over the subsequent following weeks would probably fall to like $2 per share. And then you could see how you'd be in a bad situation there. If the stocks, call it $2.15 per share, you want to raise another $40 million. You're only going to make $86 million. Like, the numbers don't work for AMC with the share price at $4 per share. You have to get the share price higher from here. So I believe potentially coming on earnings, Adam Aron could say, hey, we're done diluting shareholders. He might say, hey, we're going to raise 40 million shares, 10 million, 20 million shares right now, and then we are done selling stock for the next 6 months at least. I don't know if that's the right way to approach it, doing a capital raise and then committing to not diluting a capital raise for 6 months. I don't exactly know, but I am strongly expecting that. Now, if that does happen, that will be great news for AMC stock. Now, I think Adam Aron would kind of take away the oomph of it if he did raise capital at the same time he gave us a commitment to not diluting shareholders. That would kind of be like, what the heck, dude? and I would expect the stock would still fall on that news. But then I would expect a rally. Now, it's possible that we don't get a capital raise in the meantime. It's possible that Adam Aron just says, yeah, we're not going to be diluting shareholders for a period of time. Maybe we might convert some equity into debt or debt into equity, but we're not going to be giving you massive share dilutions for 6 months. That's the only card AMC can pull. Like, do I think they want to do that? Absolutely not. But if we're going to have a bad year in 2024, if Adam Aron and AMC need to get AMC stock higher, Adam Aron has already showed a lot of distaste with what's happened with AMC stock. He can say it's because of a bad box office slate, but if you ask anyone, literally ask your lawyer, ask your cousin, Adam Aron, why AMC stock is lower. Ask anyone, ask me. It's not because of a bad box office. We understand, how movies operate, right? Investors can get over a bad year and look towards brighter times. We do it all the time. But you can't get past the constant pressure of dilution. So I think it's only a matter of time. It's only a matter of time before we get that commitment. And that is when I would want to be long in AMC stock. That's when I believe AMC can get back to $10, $15, or even $20 per share. Now, whether or not momentum comes back into the stock at that moment in time, that really decides whether or not AMC can go through a MOAS-like event or even get back into, the 20s or 30s, which Adam Aron would love, absolutely love to see that happen. So would any of us. Now, good news is AMC stock's short interest has been rising, at least on Ortex. Now, I think the short interest is around 200%, but I cannot prove that. I cannot quantify that. That's just my opinion based on some numbers that I run for myself. If you guys want to see the numbers that I run for myself that gives me that conviction of 200% short interest, let me know down below in the comment section. Maybe we can put that video together. But 11.86% short interest of your float is where we are currently registering. About $121 million worth of short positions currently in AMC stock. You do have 1.6 days to cover. 29.72 million shares currently sold short. Shares out on loan 32.99 million. Cost to borrow 1.07%. Utilization of 48.79% and a short score of 63.45. Or 43 out of 100. You do have a cost of borrow max at about 3%. So not the most interesting numbers here, but nonetheless some numbers still. You do have 2 orders totaling $30,000 with a positive order value of 100%. Take a look at this order for January 16th, 2026. A $12 call. A $12 call for $13,000. $12 is quite a decent ways out the money right now. That is probably a pretty decent way to trade AMC. If you do think, we are going to get a commitment not to dilute shareholders, if you do think Adam Aron is going to go down that route, like I do, maybe going really far out, like 2026 with a $12 call, if $65 a piece for these contracts, that makes a lot of sense instead of trying to do, what week is he going to announce this? Is it going to be on earnings? Is it going to be before? Is it going to be after? I'll tell you right now, it's probably not going to be before earnings at the bare minimum. And if we don't get that, commitment, then it's going to be after earnings, and who knows exactly when at that point. Now, if you guys missed it, Stock Twits, we do have a sentiment that is extremely bearish at 12, message volume at 84, and participation ratio sitting at about 39, which is all of this is definitely on the low side. Now, for tomorrow, what we're going to have in our markets, not a lot as far as economic data. We are going to get tomorrow morning some data, some manufacturing data, inflation data coming out of different countries like Italy over in Europe, some data out of Russia, some data out of the UK. But for our market specifically, Fed Barkin will be speaking at 8:30 in the morning. Initial jobless claims. Now, initial jobless claims have been important, but they haven't been spiking. Now, if we were to see the labor market start to weaken, unemployment start to rise, you would first see this reflected in a spike in initial jobless claims. The spike has really not happened yet. The last couple of weeks, you spiked a little bit, probably due to seasonal kind of hiring for Christmas, laying off after Christmas. And And last week you were 224,000. You're expecting 220,000 for this last week. If that comes in high, like a spike, meaning like 250, 260, really like 300,000. That's a spike, and that would be saying, hey, maybe the labor market's not as strong as we think. That, I think, would actually be a positive for our markets right now, believe that or not, to see some weakness out there in the labor market. Now, 10 o'clock in the morning, you will get wholesale inventories. This does play a role into GDP, in which the Fed, or I should say the Atlanta Fed GDP Now tracker, is estimating about 3.4% GDP. Just recently, you were expecting over 4% GDP as per the Atlanta Fed GDP Now tracker. Now you're 3.4%. Any data that we get, especially the wholesale inventory number tomorrow, is going to move things around quite a bit for the GDP estimates. Now, you are going to get the WASDE report that comes out at noon, and Fed Barkin that will speak at 12:05 p.m. tomorrow. You will also get a 30-year bond auction, which I am specifically interested in this because 30-year bonds are relatively new instruments for government bonds. And how are people trying to price 30-year treasuries right now? So if you see, again, the bonds go higher there, that's not going to be good. If the yields go lower, that will be good. Now, as far as earnings today and after hours, you are going to be getting PayPal, Walt Disney, ARM, Wynn, and then other smaller names like Axelis, Confluent, Paycom, Mattel, Anali, and McKesson. Tomorrow morning, not too much. ConocoPhillips, Philip Morris, Cameco, Spirit, Hershey's, Lightspeed, Dynatrace, Aora, Lincoln Financial Group, and S&P Global. Thursday and after hours, Affirm, Pinterest, Cloudflare, Dexcom, Expedia, CleanSpark, Bill.com, Take-Two Interactive, Illumina, and PetsMeds. And then on Friday, some smaller names. So earnings season is not done. Next week, you're going to be jam-packed with more earnings. A lot of software companies will be reporting. Think like a Square, like a DocuSign, Zoom, a bunch of other companies will report next week. So earnings season is not even close to done yet. The big tech names are done, but next week you will also be getting, I believe, Nvidia. Maybe that will be the week after. So earnings gonna continue for at least the next couple of weeks. Nonetheless, markets were pretty weak overall today. Percentage of stocks above their 50-day moving average down about 5.5%. 3% of stocks on the markets now breaking under their 50-day moving average today alone. You're now to 47.74% of stocks above their 50-day moving average. So 53% of stocks are below their 50-day moving average. More than half of stocks out there, which is interesting because if you look at the S&P 500 itself, the S&P is hitting new all-time highs today, up almost 1%, but the average stock is not doing well. Now, the next thing to be watching in the broad markets is this 5,000 wall for SPX for the S&P 500 and 500 for the SPY. If we do get good Nvidia earnings, stocks could continue higher from here, but Nvidia does tend to rally into earnings, have really good earnings, and then kind of sell off over the next following couple of weeks. If that were to happen again, well, of course, that would probably not be good for our markets, and you may see a broadening out effect. If everything does not just sell off, you'll probably at the bare minimum see a broadening out effect, and you could see your average stocks, right, start to maybe outperform, especially if at that time Adam Aron does around then, right, Nvidia will report earnings before AMC. But if you do get a broadening out and AMC were to say, hey, we're not going to be diluting shareholders anymore, that could be a very positive for AMC stocks. So there is that. 10-year treasury yields today up about 1.5 basis points. Nothing too crazy. 2-year yield curve is inverted by 30 basis points. You have been inverting more recently, which is kind of what we expected following the Fed really didn't give us definitives on reducing the pace of balance sheet runoffs or the path ahead for rates. So there is that. I believe we covered pretty much everything. The Stocko Tracker data. You do have a decent amount of call activity for this week. So if for whatever reason, we do get a rally from here, well, yeah, the rally could be quite aggressive. You do have calls in the money about 3,700, calls out the money about 92 92,000, puts in the money of about 14,000, puts out the money of 16,000. So let me know what you think about this information down below in the comment section. Again, AMC stock is now above 30 on the RSI, so that is that's good. First time in about a month you've been above 30. Does this lead into more buying, a continued move higher? We'll have to wait and see. The stock has rallied quite a bit from the lows today of about $3.85. You're currently at $4.02 per share, which is a decent move higher for AMC stock at this point. So thank you for watching. Enjoy the rest of your day, and I will see you in the next one.